While many of you be like, yeah, Singapore dividend stocks, not stonks, they don't go to the moon one. The truth is that good dividend stocks will give you a steady PVP passive income of anywhere between 3 to 6% every year, and the dividends typically go up over time, which activates the magic of compounding. So the longer you stay invested in them, the faster your money will grow. Besides that, you will also get to avoid currency risk, dividend withholding tax, capital gains tax, and estate tax, which lets you save more money. So in this video, we will be looking at how you can start investing in Singapore dividend stocks using cash, SRS, and CPF-OA, and which are the best platforms to invest in them. But before I start, do join my 8,000 members Telegram chat group to discuss stocks or personal finance. And with that being said, let's jump right in. The first way you can invest for dividends is to buy the actual dividend stocks itself. And one of them is Singapore REITs, or S-REITs. Over the past 10 years, S-REITs gave a yield of anywhere between 3.7% to 6.8%, which is the highest yield as compared to other asset classes. Personally, I like to use these 3 very simple criteria to look for good REITs. 1. The dividend per unit must go up over time. This is quite straightforward, right? You want to earn passive income, right? So of course the dividends must go up to fight against inflation ma. Duh. 2. The dividend yield must be within a normal range. If the yield is too low, like if it's lower than the returns of safe instruments like T-bills and SSB, then the REIT is not worth it, as you are better off parking your money into T-bills and SSBs instead. However, if the yield is too high, also got problem, because they may be bad REITs and nobody wants them. Personally, I find that a range of anywhere between 3 to 6% will be good. Not too low and not too high. 3. The stock must go up over time, or at least don't go down lah. If the stock keeps going down, then something might be wrong with the stock. Okay, here are some of my personal favorite REITs. Not financial advice, of course. First, CapitaLand Integrated Commercial Trust. This is Singapore's largest REIT and is currently giving around 4.5% dividend yield. It has a diversified portfolio consisting of office, retail, and integrated development properties. Second, CapitaLand Ascendas REIT. This is Singapore's largest business and industrial REIT, which currently gives over 5% yield. It has a portfolio of properties in Singapore, US, Australia, and the UK. Third, Mapletree Industrial Trust, giving 4.8% yield. This REIT hosts industrial properties, a mix of data centers, business park buildings, and so on. Besides REITs, you can also look at our 3 local banks, namely DBS, OCBC, and UOB. Together, they make up to around 46% of Singapore's stock market benchmark, or also known as the Straits Times Index. These 3 banks are popular among dividend investors here due to the growing dividends over the years. But you might ask, what will happen when the Fed starts to cut rates this year? Will the banks chiba boom and crash? Don't worry, don't worry. All banks in Singapore are well capitalized, have diversified income sources, diversified geographies and industries, have a low non-performing loans ratio, and they quite abide by the strict regulations set out by MAS. So while the dividend growth may not be linear, Singapore's local banks will likely increase their dividends over time due to regional expansion and internal growth. Quick pause. If you are looking to invest in the Singapore stock market, you can check out Webull. Among all the Singapore brokers, Webull has the lowest trading fee for the Singapore market at just 0.05% of the total trade amount with a minimum of $1.60. But if you are a new user, you will get to enjoy commission-free trades for Singapore stock trading for 3 years. Though, you still have to pay the platform fee of 0.025% with a minimum of 80 cents. Second, instead of having to trade the usual 100 shares, Webull supports odd lot orders for eligible SGX stocks. This means you can trade with as little as 1 share. This makes investing in SGX stocks a lot more accessible to investors like you and me. And third, Webull lets you earn a yield on your idle SGD funds, thereby optimizing the utility of your idle cash while you are waiting to invest your money. Right now, Webull is running a few promotions. For the welcome promo, if you make an initial deposit of $500 or more into your accounts and complete 1 US buy trade, you will first get 5 free NVIDIA shares worth $10 to $500 each. And for my viewers who use my exclusive link to sign up, you will also get 2 additional NVIDIA shares. Next, you can get up to $2,950 worth of NVIDIA shares by depositing $100,000 complete 10 US buy trades, and fulfill the maintain requirements, or subscribe at least $100,000 to Moneyboo and maintain the funds till the end of July 2024. Lastly, there's a new transfer in promo from which you could get up to another $10,000 worth of Nvidia shares and 3-month commission-free trades for US stock trading. This is eligible for both new and existing users who sign up with my link in April, initiate and successfully transfer more than $5,000 worth of shares to Weeboo. With that being said, let's get back to the video. So those are the examples of individual stocks that you can look to invest in. However, as always, you will need to do your own research to make sure it's a good stock before you invest in it, yeah? And even after investing in it, you also need to stay up to date and monitor the company's performance from time to time. So if you don't want to do all that, an easier way is to just invest into Singapore dividend ETFs instead. They are great if you also want to get some passive income but may not have the time to actively monitor and manage individual stocks. Plus, you will also get some diversification with ETFs. The first example is the Straits Times Index ETF. This ETF tracks the performance of the top 30 companies listed in the Singapore Exchange. Its top holdings include our local banks and large Singapore-based companies such as Singtel, Singapore Airlines, and some of the large REITs from CapitaLand and Mapletree. There are actually 2 STI ETFs listed on SGX, the Spider STI ETF and the Nikko M STI ETF. Wow, got 2 STI ETFs there. What's the difference? Actually, there's not much difference between them, other than one is by State Street Global Advisors, another is by Nikko M. Spider STI ETF is listed earlier than the Nikko M STI ETF, so its asset under management will be slightly larger. But apart from that, both ETFs are pretty much the same. They have roughly the same allocation, pay out dividends twice a year, and have the same expense ratio at 0.3% per annum. And they give a dividend yield of about 4.6%. Besides that, another example is the Lion Philippe S-REIT ETF, which holds a diversified portfolio of S-REITs, such as the REITs that we mentioned earlier, as well as other REITs such as Landlease REIT, Frasers Hospitality Trust, and Suntec REIT. This ETF pays dividend twice a year, has an expense ratio of 0.6% per annum, and currently has a dividend yield of around 5.9%. Now, let's take a look at how you can invest in them. For investing with cash, there are a ton of brokers for you to choose from. But Weeboo is currently the cheapest platform for investing into SGX markets, as they only charge a low trading commission of just 0.05% with a minimum of $1.60. As for CPF-OA and SRS, the cheapest platform will be either Poems or FSM1. Poems charges a 0.08% commission, whereas FSM1 charges a flat fee of $8.80. So if you are investing less than $11,000, Poems would be cheaper. Otherwise, you can go with FSM1. Poems also charges a 1% dividend handling fee, whereas FSM1 does not. Take note that there will also be trading commission fees and recurring service charges by the agent bank, yeah? Moving on to the other way to invest into Singapore dividend stocks, ROBOADVISORS. For cash investments, we have SIFE and OCBC RoboInvest. Unfortunately, there's no way to invest into Singapore dividend stocks via SRS and CPF-OA through RoboADVISORS. Okay, let's go through them. For SIFE, they have the REIT Plus portfolio, which tracks the SGX IHS REIT Leaders Index. This portfolio holds 20 of the most well-known Singapore REITs in sectors such as shopping malls, office, hotels, and more. For this portfolio, you can go with either the 100% REITs portfolio, where the whole portfolio is REITs, or if you want a slightly lower risk, you can go with the REITs with risk management portfolio, where 62% of the portfolio is in REITs and the remaining in bonds. As expected, the 100% REITs portfolio will give you higher returns as compared to the REITs with risk management portfolio. SIFE charges a fee of anywhere between 0.25% to 0.65%, depending on your investment amounts. Next, OCBC RoboInvest offers a few portfolios for you to choose from. The first portfolio is Singapore Cash is King. This portfolio invests in selected dividend stocks in the SGX market that have positive free cash flow and provides potential for capital appreciation. This portfolio excludes stocks that has high valuation. Since inception, this portfolio has given an average return of 0.7%. As for the holdings, you have stocks such as Landlease Global Commercial REIT, First Resources Limited, OUE Commercial REIT, and so on. The next portfolio is the Singapore Stable REITs portfolio. This portfolio invests in REITs listed on SGX and has a 2.27% average return since inception. For the holdings, you have Paragon REITs and a few of the REITs that I mentioned earlier. Lastly, the third portfolio is the stable Singapore Giants portfolio. This portfolio invests in Singapore dividend stocks that have relatively lower volatility and a relatively higher market capitalization. This portfolio has given a 0.88% average return since inception, and it includes stocks such as Netlink, Singtel, Wilmar International, and so on. OCBC RoboInvest charges a flat fee of 0.88%, and both RoboAdvisors will automatically reinvest your dividends for you. Overall, RoboAdvisors lets you easily invest into Singapore dividend stocks as they provide you with a ready-made portfolio and auto-rebalancing from time to time. However, the downside is that they are charging a percentage fee on your portfolio every year, so that fee could add up over time. Anyway, that was a quick analysis of how you can get started with investing in Singapore dividend stocks. Hopefully, you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.